You get to reinvent yourself. I think the caterpillar calls it the end of the world. The master calls it a butterfly. So when you reach the end of your journey, whatever that is, and you feel like it's even failing, possibly, it might just be your chance to reinvent yourself.
Hi, Mark. Welcome to the show.
Hey, Mark, great to be here. Glad to be on your show. Thank you.
Thank you for being here. Welcome to Peak Performance Perspective, where we help entrepreneurs master health, wealth, and relationships. I have to start out by asking, Mark, what does peak performance mean to you?
It makes me think back to something that an old 90s commercial. Do you remember this? The commercial was, "What do you want on your tombstone?" And it was talking about pepperoni pizza, basically. It was an ad for pizza, tombstone pizza. But it got me thinking, what do I want on my tombstone? And there's a phrase, "He had such potential." Now, that's a phrase that is hopeful when you're young and you're just getting started. He's got such great potential. And I hope to have my potential actualized. But the thing that I don't want on my tombstone is he had such potential. Unrealized activated energy is something that I think it haunts me at night. I think it's something that for most people who are driven, it should haunt you. So what is peak performance? It's 100% of your potential activated, like a rocket ship lifting off with all of its force and energy, pushing against gravity and inertia to truly become as much as you possibly can be. That's going to be different for different people. But as a certified financial planner, and people work with me from all facets of life, some people are scraping by to get to net positive net worth. Other people are hitting 100 billion or even more. We work with real estate investors, even NFL Super Bowl champions, a lot of business owners. So there are people from even 7 or 8 or even 9 figures of net worth that we have the privilege of serving. The key to me for peak performance is not a dollar amount in your bank account I know that you've had a great journey with your physical health and your fat percentage and everything. To me, it's the activating of your potential that brings you the most, I think, resilience and I guess the assurance that you're hitting all cylinders, you're firing on all cylinders.
Mark, not only we share the same first name, it's funny that it gives me goosebumps because you're the only person that has talked about it from a tombstone perspective, because I also think from the tombstone perspective. It's very interesting you brought that up. You talked about actualizing your potential, hitting all cylinders. When you're thinking about your life and your peak performance, are you thinking about hitting all cylinders in one direction to be able to take this and help as many individuals as you can? Or are you also looking at areas in your life and thinking, yeah, I've really mastered this thing, but I really want to, in the next 5 years, this is what I want to master. I haven't even gotten started, or maybe you're intermediate, but you also have multiple things that you want to do.
Yeah, I think that's part of the joy of being an entrepreneur. You get to reinvent yourself. I think the caterpillar calls it the end of the world. The master calls it a butterfly. So when you reach the end of your journey, whatever that is, and you feel like it's even failing, possibly, it might just be your chance to reinvent yourself. No, I think the best way we can live is to decide what is it that inspires us and brings us to that next level of awareness. Yes, given what you've asked, I think the best thing you can do is include all areas of your life. There should be multiple aspects. There's even a tool that we use with our clients to help them really get a sense of how are you doing in the financial realm? Yes. And again, as a financial planner, that's what we specialize in and work in. But forgive the pun, but we're in the whole life business. And I want to give folks the chance to really understand, how does your money impact the rest of your life? Before I got into financial planning, I got a master's of divinity there in Texas, actually. And what's interesting is money seems to have its tentacles, positive or negative, in every area of your life, your relationships, your physical health, really your business, your parenting, everything. So in what areas are you building and sustaining goals in each area of your life? In fact, if you wanted, do a little test on a scale of 1 to 10 to being the highest. How are you doing at actualizing your potential in your emotional health, in your relational health, in your social health? What about hobbies you might have outside of work? There should be multiple dimensions to the beautiful invention that's called you. And if you're failing in one area, it's going to show up in the other areas of your life.
How you do anything is how you do everything. And if
Yeah.
winning what we're doing, we're winning in other areas. And if you're failing in one area, chances are we're failing in others. Out of
That's right.
curiosity, what is one aspect of your life that you're currently working on that is not your business that you're trying to
Mhm.
achieve performance in?
I saw a joke. I don't know if it was a joke or what, but it was saying basically anytime after age 30, it's just permanent dieting and back pain until you die. Now, I don't want that to be my reality. So I'm interested consistently in finding health tweaks that get me to a better optimal state of life. Learning how to stretch right now. I'm incorporating a 10-minute, 15-minute stretch at the end of each day. And it's actually enjoyable. I never liked stretching before, but it's starting to really, it's something I'm looking forward to right now. So becoming more limber, learning how to become higher in my balance quotient, I think that's what I'm working on right now.
Love it. You said you have a degree, you have a master's degree in divinity. So you are a religious person.
You could say that. You could. My wife jokes and says that I'm just really good at making chocolate. So, Masters of Divinity. No, yeah, no. So my background is in studying the Bible, and I went to a seminary school there in Abilene, Texas, and then stumbled into the financial arena. A quick story there. I jokingly say I just my favorite book of the Bible was the Book of Numbers, and I got into money that way. Sorry for all these dad jokes, but what happened was I graduated with an interest in learning about the otherworldly, the spiritual, the relational, and the community forming, and a sane way of living. And I never really saw myself being a pastor or something like that, but I was very interested in I guess, the alternative life that the spiritual life or the Christian life really calls people to. And it's inspiring to me. But then I graduated and I had to hit the real world. And I was 6 figures in student loan debt. And we graduated in 2008, Mark, and there was no jobs. Nobody was hiring. And I didn't have, more importantly than all of those headwinds, the biggest headwind of all was I didn't care. And I didn't have a plan for what to do with this massive albatross around my neck called student loan debt. In fact, I jokingly say I married 2 women in college. I married my beautiful wife, who is still my wife today and of 20 years now. And I married Sally Mae. And Sally Mae wanted a triple wide extra master bedroom in our house, and we didn't want her in the relationship. But the monthly student loan payments were so egregiously large that it felt like, again, an albatross around our neck. It felt like we were drowning in debt. And so we were working 3, 4, 5 side jobs in addition to our full-time jobs, trying to make ends meet. And so that's what got me straight up focused like a laser beam on this money thing. I had to figure it out for myself. And that's where things started for us.
That's really interesting because a lot of religious people that I talk to, sometimes have a difficult relationship with money. And
Mhm.
they are trying to figure out a balance in between worshiping God and not being the type of person that worships money. Having this deep religious background of yours, what is your take on how one can maintain this balance?
I think balance is a misnomer in some ways. I feel like when you think about balance, think about again, I'm into stretching right now, so you'll have to forgive me for some of this, but these analogies, but think about what you're doing when you're balancing. When I'm on one foot trying to do some sort of yoga position, I'm typically overcorrecting my last mistake. That's basically what balance is in a physical manifestation. I'm overcorrecting my last mistake. So balance is the in-between space of the overcorrection. So you're never truly, I would say balance is not even supposed to be the goal. Goal should be abundance. It should be actualizing your potential. Going back to your first question, balance is the means to the end. I can never get to my potential unless I'm balanced along the way. But abundance or peak prosperity is the end result. It's the goal. So in my book, the rocket ship should be balanced on the launch pad, should be balanced going straight up. But what good is a unactualized rocket? If it's sitting there on the rocket launch pad, it looks so beautiful. You have such promise, such hope. But unless you actualize it and lift it up and balancing itself as it climbs into space, equally on the left and on the right and forward and backward, unless it reaches space, unless it realizes its potential until it hits peak performance, to use your show's name, what good was the balance in the first place? To your question, how does one maintain a balance? I would say the first thing is keep money in its proper place in your life. The money itself is a dead object. In fact, it's mainly just a way to activate who you already are. If you're a kind person and you get a lot of money, you're going to be a great force for good in the world. If you are a jerk and you stumble across a lot of money, you're just going to be a really big jerk. So figure out who you are. That's the first thing to do. And then again, as a CP, I would say the next step, and the maybe most important step after figuring out who you are and who you want to be, ask yourself, what does my money need to do for me? because this is such a simple sentence, but it's so profound because most people never ask this question. But the question is, what do I want my money doing for me? Because where I put my money makes it act differently. And again, that's such a simple, obvious, the BFO, the brilliant flash of the obvious here. A 401k is different than a savings account, which is different than a hedge fund, which is different than real estate, which is different than gold or stocks or life insurance or annuities or muni bonds. But most people just stumble through life and just open these accounts, this crypto account over here, a little bit of Robinhood trading over there. Maybe they got that old 401k from that old job, and what are they really doing with it? And what was the account login information again? And they just stumble through their life and collect all these accounts like they're throwing rocks in a bag. And the bag at first is fine, but all these shiny rocks in here. But over time, they're like, what am I doing with 6 credit cards and 3 brokerage accounts and 13 different whatever, right? Checking accounts. So the key really to answering your question is putting money in its proper place and understanding what does it need to do for me, because and is where my money is at today acting in the way I want it to act. 99% of Americans fail that test whenever we do an overall financial review of their whole overall situation.
With anything, there are tactics and then there's mindset. And a lot of these things that you talked about is really the first beginning steps that we need to have a specific type of thinking before we can layer on the tactics. So when it comes to the role of mindset, what are some other things that you do to help your clients adopt a healthy financial mindset?
Yeah, it's a good question. I think there is a relationship between going up the ladder to mindset and then coming down the ladder to systems and strategies and even financial contracts and products and tangible tactical things that you can do today. And you need both of those. And I hope we'll get to cover some of both of those, the mindset and the tactical, in today's episode. Other things to do on the mindset level is, again, discovering where you want to go. What do you truly want? Who are you? That's maybe a good question to ask. And then what do you truly want? Again, most people are told what to want. Here's your 401k. Sign here. What is it? Oh, don't worry about that. We've got a lunch meeting to get to in 45 minutes. Please sign here. And then 30, 40 years later, they're opening up their 401k thinking that they're all taken care of. And they're shocked to find out that they've underperformed the market. The fees were higher than expected, and they can't retire like they thought they could. Oh, and by the way, all that 401k money is taxed in retirement. And meanwhile, over the prevailing 30 years, tax rates went up. This is going to be the story of literally hundreds of millions of Americans. So again, where you put your money makes it act differently. So determine who you are, determine what you want, and then ask, is where my money is at today doing what I think it needs to do for me without taking a bunch of unnecessary risks? Now, I'm an entrepreneur. I get it. You are too. Risk is like hard-coded into our DNA. I'm big into taking important, sizable, scary risks. I, however, am no longer 18 years old. And so I don't need to take unnecessary risks with money I cannot afford to lose. I take plenty of speculative risk with money I can afford to lose. That's called fun money. That's called play money. But money I cannot afford to lose, I am not putting into an unnecessarily risky situation. Again, most Americans, fail this test. I'd say the first thing you can do is just say, who am I? Where is my money? Is it doing what I want it to do for me? And do I understand the prevailing risks that are baked into the traditional places most Americans keep their cash?
Great 4 questions, right? And if I'm listening to this and I'm going along answering the questions as Mark Willis is asking them, third and the fourth questions is maybe, I don't know. Let's start with some tactical stuff. In today's ever-changing economy, when retirement just seems to be almost impossible, Social Security, we're thinking about, may run out, we may not get any money. You describe people are setting up accounts at companies just because they've been told to without being educated how to watch it perform over the years. What are certain things that individuals should be focusing on to secure their financial future?
Yeah, that's a great question. I think the key to focus is important. It's one of the nice things about being humans. We've got our eyes right in the front of our head, not on the side like most other animals out there. We can't see, like a grasshopper. Yeah, exactly. Yeah, there's some advantages there. You get a little more peripheral vision. You watch out for predators, but the eyes in the front center of our heads helps us to focus and to find that bison on the prairie or whatever it is, right? So that focus is key. And so your question is, what should we be focused on to secure our financial future? In my opinion, again, asking ourselves the function of money and what are the verbs, adjectives around our ideal financial instrument. So instead of thinking about nouns, let's think about verbs and adjectives. Here's a couple of examples. Most people think they want a great brokerage account or the fancy new meme stock or that cool cryptocurrency that they heard about at the barbecue last weekend. But I would suggest let's start with function. So what are some of the attributes of a perfect financial instrument? We can have a little fun with this, Mark, if you want. So let's do a little fun experiment here. You and I can throw some ideas out. If you were to just wave a magic wand, if you were Pope of money for the day, and you could create legally a brand new financial vehicle that had everything you ever wanted, what sort of characteristics would you want it to have?
When you say brand new financial vehicle, what does that mean?
Like an account or a financial tool, a part of the tax code that gave you some sort of access to a financial instrument that let you do what you want it to do for you. I'll give you an example. I would maybe want a competitive rate of return that beat out inflation with predictability and like an aggressive but safe competitive rate of return. So that would be my first one. I'll give you another one, then I'll pass the ball over to you. I'd want it to be tax-free. You and I understand the power of taxes and taxation. If you're making any kind of money in the business, anyone listening to this knows the tax man cometh. The IRS, you put those words together, it spells theirs because they think it's all theirs, the IRS. So I want my money to be tax-free anytime I want it. What about you, Mark? I threw a few out there. What about yourself?
Honestly, those two. Competitive rate of return, interest used to be so high back in the day. Now it's at a savings account is like 0.002%. And the tax, especially for a W-2 employee, when taxes are really high, entrepreneurs, they have a little bit more legal way, but hey, free all the way.
I'll throw a couple more out just to get our listeners thinking categorically speaking anyway. How about liquidity? I want access to my money. How many times have you needed money, but you couldn't get access to it for whatever reason? Is it tied up in the equity in your house, for example, or it's tied up into a CD that you can't touch? So again, I try my best not to get into nouns, and I just said a few of them, house, but just think liquidity. Again, the focus is on, let's focus on the function of our money. Keeping a note, this would be a great journal exercise for anyone listening. Just make a little list. What do I want my money doing for? What are the attributes? How about privacy? How about privacy where you could keep this asset private off of the radar, let's say, of institutions that may want to take it from you. For example, if you have a kid going to college and you have a bunch of money in some account that's hidden from that college, then you might look poor on paper and get access to more financial aid, for example. But you may want it to be visible to, let's say, a bank. If you ever need a loan, you want to show a big pile of money. So you'd want it to be strategically camouflaged, let's call it that way, and private against bankruptcies and lawsuit protection and creditor protection and any other form of like malfeasance in the courts. I'd want to be able to pass it on to my next generation without any kind of hindrance. I don't want to have it tied up with probate law and delays and so forth. So, yeah, again, we could probably keep going here. Did this spark any other ideas for you, Mark, or is that pretty comprehensive?
What is a probate law?
Oh, okay. Yeah, I just got off the phone talking to a lady. She and I were talking, a long story, but most assets that you die with are going to go through a public record. And when that happens, if there are creditors that are out there that you owe money to, they could attach themselves to your estate. And that means they could take your money from you and your estate after you pass away before your family, your kids, or whoever get to that money. Right or wrong, that's just the way of the world. And not to mention, it's publicly humiliating. Your family has to wait months for the courts to settle who owes who and what owes what. And that, of course, delays and puts people sometimes into financial strain. Now, you can bypass probate with certain assets. And that's a good thing if you're trying to, one, keep things private, two, make things easy and simple to pass to the next generation. Yeah. So are there any other attributes that come to mind for you as far as like where you'd want your money to go? If you could just be Pope of money for the day.
If I was Pope of money today, I would print more money and
print more money. Yes, I was waiting for you to say that.
Why even taxation and saving and return? What gives over 10% return? Sprint
That's right.
yourself a couple $1 billion, we're good to go.
That's right. I was waiting for somebody to good. I'm glad to hear it. So yeah, given all that's where I start with a lot of my clients. I start by at some point they're like, Mark, is this legal? Are we even okay to talk about this? I'm like, yes, this is just blue ocean thinking. Let's think creatively. Let's stop starting with someone else's prescription for what you should do with your money. That's like what I heard somebody once said, hey, Mark, don't do what banks tell you to do with your money. Instead, watch what they do with their money and then just do that instead. Because banks are the most profitable enterprise in all of human history. There are more banks, more profitable banks doing more margin than any business I'm sure listening to this. I don't care what kind of business you're in. If you could somehow own and finance and operate a bank, you'd probably improve your margins considerably. There's a book, I don't agree with all the book's conclusions, but the title is the best part. The title by David Graeber is Debt the First 5,000 Years. And what that book title tells me is that banks and debt are a core human institution. They are as old as cave paintings, banks are. And debt itself is a core component of the human experience. It's as old as marriage and friendship and more. So if we're going to have this thing called banks and more importantly, banking, the verb, then I want to own and control that too in my life. I don't want to outsource the most profitable enterprise in all of human history. I want to insource that. So I tell a lot of our clients that you are in two businesses because a lot of our clients are entrepreneurs. And I say, you're in your entrepreneur business, you're selling lemonade or whatever it is you do for a living, and you're in the banking business. And if you don't understand that, then you're probably sitting on the wrong side of the banker's desk, meaning you're the sucker. In other words, you're the slave to their banking system. So a big part of the work we do with our clients is helping them take back control of the banking function in their life. And in fact, that's what Bank on Yourself is really all about.
And I was just about to ask that. Like, how is the bank in yourself strategy different than the traditional financial planning methods that are out there?
Okay, yeah. So now we're going down from mindset to more skill sets and strategies and getting more tactical. But it is also a mindset. Think about it. Bank on Yourself is a call to action. It's a reminder that you are not just a tennis ball floating down the gutter of life. You are moving with agency in your life. You're activating your potential. You're hitting that peak performance that you talk about. So banking on yourself is a mindset, but it's also a strategy. And so you asked the question, how is it different than traditional financial plans? In very brief fashion, there are 4 flat tires on every traditional financial vehicle. What are traditional? That'd be your 401ks, your IRAs, any traditional retirement vehicle out there. Let me walk through them quickly. The first flat tire, no guarantees in a 401k or IRA or any other similar retirement account. There's no real clue as to how much you're going to have in that 401k when it's time to retire, and you must depend on it. Second flat tire is that there are fees. The Department of Labor says that the average 401k and IRA plan, actually IRAs are even worse, has at least a 1.5% fee baked in throughout the overall accounts. Even if you think you have a small, low fee cost 401k, it's on average, the hidden fees total more than a 1% per year. The Department of Labor says that's a big deal. Now, 1% doesn't sound like a big deal, but if you add it up over a 35-year period, there's going to be a 27% vaporizing of your account balance, meaning if over the course of 35 years, your typical retirement, 27% of your money is going to get eaten up to fees. So that's the second flat tire. The third is taxes. These are all tax-deferred vehicles. Now, tax-deferred feels really good in the moment, but what does the word defer really mean? It doesn't mean eliminate, it just means push off until later. So Mark, pop quiz here. Do you believe, you and I are about the same age, do you believe over our lifetime that taxes are going to go down or up? Yeah, so in that case, does it make any sense mathematically to defer our taxes if we think taxes are going up? I haven't found a calculator that says we should defer something if our income is going to stay high as a successful entrepreneur and our income tax rates are going up. That's suicide, tax suicide. And then the final problem with traditional accounts to finally answer your question is there's no way to tell how long you're going to live. And that ultimately is the coup de grace to most traditional retirement accounts, because how am I supposed to know how much to pull out of that 401k or IRA when it's time to retire? How do I know I'm not going to outlive my money? And more importantly, what's going to happen to me if I outlive my money? So traditional retirement accounts are four flat tires on the side of the road. To answer your question now, how is Bank on Yourself different? Let me walk through this and as quick I can. What is Bank on Yourself? It's referring to a strategy that relies on a 100-plus-year-old financial asset, 200 years plus, where it's grown every single year, guaranteed. Outside of the stock market, it's contractually obligated to grow in value every single year, and it gets faster and faster in growth every single year. It's dividend paying whole life insurance of all things. So I wasn't looking at this. It wasn't my first stop on the financial road trip I was on personally, but as I came across this asset class, it became more and more compelling to me. So again, it grows every year, guaranteed. The money in the policy, there's a death benefit component. Sure, that's going to be great for my family, but there's a liquid money component called a cash value. And Mark, that cash value is accessible liquid funds. I can use it for whatever I want throughout my entire life. Think of it almost like a line of credit to yourself, where I can access that money. I can use it for my business. I can use it for pleasure. I can use it for a trip to Vegas. I can use it for my kids' college. And back to privacy, it's not going to show up on the financial aid formulas for my kids' college, but it will be liquid, visible, accessible money that I can show a banker if I need to get a loan for a mortgage or something like that. And that actually brings me to the third point. I can use this money like a bank. I can borrow against it. So I've now become, by using this tool, my own banker. I borrow against the policy. I pay myself back on my own terms. And if I need to skip a few payments or if I want to throw a little extra or whatever, I can do that. I'm in complete control, or in this case, you or whoever owns the policy is in complete control of the use and operation of this cash flow management system that we call a dividend paying whole life policy. And then finally, fourth thing, it is life insurance. So I'm going to be able to solve that need, which also, by the way, bypasses probate. Life insurance goes outside of the probate system and goes directly to my beneficiary, whoever that person or charity might be.
If I'm listening to this podcast, which I am too, because I'm talking to you, and my mind is being blown right now, and I'm asking myself, I've been reading Dave Ramsey books for the last 10 years, and I've been reading other financial books for the last 10 years. Why is nobody else talking about this?
Well, Dave sure loves to talk about whole life insurance, but I believe he is correct in many ways. I guess you might say I learned my first baby steps from him, and I have a lot of good things to say about Dave, but he is dead wrong, okay? 100% dead wrong on this type of whole life insurance. Now, he's right about some whole life. A lot of whole life insurance, a lot of other kinds of life insurance is poorly designed, built for mostly commissions to the insurance agent. It grows very slowly. What you and I just talked about is categorically different from what he loves to hate on his radio shows and in his books. For one, we build the policies much more efficiently, and we take a commissions pay cut, roughly about 70% less commissions, to design the policy for cash value. If you might think of it like a seesaw, there's a way you can design whole life where it's all about the death benefit and big commissions. That's the kind he talks about, and I agree with him that I don't like that kind of whole life for most people. On the other hand, you could flip the script and let the cash value be what's favored, cut the commissions dramatically, and actually have a much more efficient, robust tool. Again, the life insurance is almost like a bonus to me, Mark. It's there, but it's not really what I think about. It's a lot more fun to spend money while I'm alive. Thank you. So I use the policy and I design the policies for my clients to be a cash flow management system. It's a contingency fund that I can use and my clients can use for any purpose they might need. Again, personal needs, business needs. But right before this interview, I got off the call with a gentleman. He's a business owner up in the upper Midwest area, and he's putting about $250,000 into a policy. Now, please keep in mind, folks, you can put a lot more than that or a lot less than that. The more you put in, the more liquid funds you have access to that you can use. So his plan is to use it like a line of credit and get rid of his banker. He wants to fire his banker, and that'll allow him to become a lot more competitive in his marketplace.
Mark, I always say this thing, suffering teaches us lessons and values that books just don't.
Mm-hmm.
And you are the co-host of fantastic podcast, which is not your average financial podcast. And I know on that podcast, you have heard many a story of suffering. What are some of the most important lessons or stories that you have shared with the audience or heard from them that has shaped you to be on this mission now to really tell people how money should be handled?
Yeah, it's a great question. There's a quote, I'm looking it up, by Ernest Hemingway. He says, "The world breaks everyone, and afterward, many are strong in the broken places." And I love that quote because there's a choice we get to make in our suffering. There's no getting around suffering in this life. So the question is, what are you going to do with your suffering? Will it be your master or will it be your servant? Will you be able to be taught something through your suffering? And that keeps me up at night because it goes back to, once again, what kind of person are you? Are you going to actualize your potential and hit your peak performance? And maybe most importantly, interestingly enough, how will you interpret your suffering? And so when I went through the major trouble of our student loan debt, for example, that's not all the suffering we've all gone through hard times in our life, but I could have interpreted that as the government should bail me out, or, woe is me, I'm a victim. Maybe I would have interpreted my suffering that way. Could I have just ended up like that tennis ball I mentioned earlier, just floating down the gutter of like, oh, woe is me as I float down into the sewer? Rather, what you're helping us picture, and what I think a lot of your guests that you've had on your show help us picture, is a more, I think, valuable use of our suffering. Take that suffering and invest it. It might just be your best investment if you have the right interpretation of your suffering. And I believe, honestly, again, eyes in front of our head, the best thing we have to do is to focus with proper interpretation of what is it we're looking at. Am I looking at a bison on the prairie, or am I looking at something trying to come and hunt me down and kill me? Interpretation matters. So when you take suffering, whatever that is, ask yourself, what am I going to see this as? How will it impact me? So back to whole life insurance and bank on yourself. You can either treat banking and debt as a problem. Oh, woe is me. I'm going to live on this debt staircase forever. I'm going to climb up one loan and then fall back down to buy the next car or buy the next credit card or get the next vacation on credit cards or get the next business loan. I had a gentleman, he's a painter. He owns a 7, almost 8-figure a year business doing painting. And he was spending most of his revenue on a bunch of high interest business loans. Okay, we're talking several $100,000 a year in interest payments. Just makes you sick, right? His plan, and he's since done this, he's killed all those lines of credit. And he's now opened up a several $1 million line of credit against his policy that he now uses, operates his business through. And he hasn't had to darken the doors of a bank ever since. Can you imagine taking the problem of banking, the suffering that many business owners face, and what makes most businesses go out of business, the banks, and turning that around, reinterpreting that as your best asset in your portfolio as a business owner? Can you imagine the kind of sanity that brings, the peace of mind, the better nights of sleep you get, the better conversations with your spouse, and imagine how competitive it makes you when everybody else in your industry, this gentleman, he has other competitor painters, they're all doing the same thing. They're all in debt up to their eyeballs too. Imagine how much more competitive you become when you're the only guy in town or gal in town borrowing against yourself, when you've brought in-house the banking solution. Mark, it gets me goosebumps, so get me off my soapbox quick.
There's a quote somewhere, I heard somewhere, that says, money is a mistress that is very demanding, and if you don't pay attention to her, she leaves you very fast. Financial planning, planning for retirement, these are some of these goals, just like weight loss goals. We all think about first of the year. This is the year. This is the year I do this step. This is the year I take that step. And almost always the minutia of life gets into way and it gets kicked. The ball just keeps getting kicked forward, right? And this never happens. So if I'm listening to this and I'm thinking, oh my God, Mark is so right. Like, I need to do something about it. And you know what? I'm done waiting about it. I need to take my first steps. But I don't know what my first steps are because they're just overwhelmed with all these options. For someone new to financial planning, where should they begin?
Start with yourself and grab a piece of paper. It's totally free. Grab your notes app on your smartphone and just start writing down the best ideas you can come up with for what you want your money doing for you. Back up this podcast, listen to the few of the ideas that Mark and I passed around, and then come up with your own too. I found that can be the most valuable 30 minutes of your financial life, to daydream a little bit and ask yourself, where is it that I want my money going? And is my money where it's at today doing what I want it to do? Back to health. I might want a 6-pack of abs, but if I'm face pounding a full bag of potato chips every night, that's never going to happen. So you got to align your actions with your beliefs. If you want to lower your tax, you got to change your facts. As it's all legal truth telling, but you got to change your facts. That means buy some real estate, get a whole life policy. Do all the legal deductions you can to lower your tax bill, for example. So you cannot just want something, you have to change your reality to get there. So point is, start with the piece of paper, start with the daydreaming, and then get down that ladder, get out of the mindset clouds, and actually put all that spinning tires stuff that you do to action. Put some rubber to the road and move down the road a little bit. Change your situation, and you'll find little bit by little bit that you gain more confidence.
So I just wrote these things down. I'm listening to the podcast. Now I want to take the next step. You are a 3-time #1 best-selling author. So if I wanted to get on the next step of the steps you laid out, which one of the 3 books would you recommend someone starts out with?
I'll tell you what, we'll give a free copy of one of our books away to folks that jump on our calendar and have a quick conversation with me or one of my colleagues. We've had several books written on various topics. If you're into real estate, we've got a book around that. If you are onto online businesses of different forms, we have a book about that. We have a book on more the broad brush strokes of the financial universe. But just reach out to me and we can discuss the options. You can go to kickstartwithmark.com. That's withmark.com. Imagine what it would feel if you knew for sure that your financial plan was going to meet its goal without having to take a bunch of unnecessary, improper risks with money you can't afford to lose. So we sit down with folks. We do a 15-minute phone brainstorming session. We go over your questions, where your money is today, and help you think about new categories for, again, the financial tools and what's available out there for you. Maybe it's bank on yourself, maybe it's something else. We get started with that conversation, and we'd be happy to send out, just make sure to put out a comment in our calendar appointment when you go to kickstartwithmark.com, and we'll get you that free book.
Mark, in the world of financial planning, there are so many ways one can go about. And because there is a plethora of options available, almost always it leads to paralysis. When it comes to financial planning, whether I'm an entrepreneur, whether I'm not an entrepreneur, one of the things that we are all looking for is in somebody that we can truly trust. And this trust not only just comes from certification, but the values person has, the way they carry their life, and the whole energy and aura about them. Having known you for a little bit, having had a chance to pick your mind for a little bit, you are that person. And the fact that you have made your life's mission, you're boosting all engines in the primary direction to be able to help better people's lives, because we're just mostly too ignorant to know all of this. It says a lot about you. You got yourself out of financial debt. You got into real estate. You could have become rich and just stopped there, but you didn't. You made your life's work about helping others as well. So thank you so much for being on the podcast. It is an honor and a pleasure to have met you and just starting to get to understand all these complexities and how we can navigate about it. Any last words to our audience members?
That's very kind. And I certainly wasn't born with any of this information. I was ignorant, as all of us are when we get started in our financial journey, maybe more, but it started with just learning to be humble and say, you know what, I haven't arrived yet. I have a lot more to learn. That was 13, 14 years ago, and I'm still learning today. So for those that are just getting started, don't worry. If you don't have the $250,000 that I mentioned from that guy earlier, maybe you've got $100 a month, $300 a month that you can scratch together. You can do it. Crawl if you have to, walk, run, just start making motion, because as you said earlier, there are so many options, and analysis paralysis, I believe, comes when we are faced with too many options and we're looking for perfection. Better than perfection is getting it done, right? Done is better than perfect, as the old saying goes. So just do what you can, do it ugly first, and then get a little better and get a little better and try to learn a little bit more. The light becomes more available the more you walk into that dark room with your flashlight on.
It's impossible to steer a parked car.
That's right.
This must start moving. And with Mark here on the call, we know which direction to turn to. So Mark, thank you so much for being on the call. I hope to talk to you soon again.
Thank you.